Gary DeWaal here, and this is Bridging the Week for February 2nd through 6th, and today is February 9th, 2015. Good morning. Two regulators published findings of surveys of buy and sell side firms in the securities industry regarding cyber attacks while making recommendations to help mitigate threats. Also, a national bank settled with the Commodity Futures Trading Commission related to its alleged role in the collapse of Peregrine Financial Group. It actually was a relatively quiet week last week as folks dealt with more snow and bitter cold in many parts of the United States. But we have a bunch here to cover, so let's get started. Both the Securities and Exchange Commission and the Financial Industry Regulatory Authority published observations of their review of cybersecurity practices at securities industry firms, both on the buy and sell sides. FINRA also identified principles and effective practices firms, quote, to consider to address cybersecurity threats. Most dramatic, 88% of all broker-dealers and 74% of all investment advisors reported already having sustained cyber attacks directly or through one or more of their vendors, said the SEC. Most attacks were the result of malware and fraudulent emails. According to the SEC, 54% of all broker-dealers and 43% of advisors specifically said they had received fraudulent emails to transfer customer funds. Where losses were sustained, 20% of the broker-dealers, quote, noted that these losses were the result of employees not following the firm's identity authentication process, end of quote. Although a large majority of broker-dealers incorporated requirements related to cybersecurity into contracts with their vendors and business partners, only a small minority of advisors follow such practice. Among the principal cybersecurity risks identified by FINRA members included the cyber risk of hackers penetrating systems for account manipulation to destroy data, insiders or other authorized users abusing their access for personal purposes or to place time bombs or engage in other destructive activities, or non-nation states or terrorist groups entering systems to wreak havoc. Although FINRA acknowledged that there, quote, is no one-size-fits-all approach to cybersecurity, end of quote, it identified a number of practices firms should consider to minimize threats, including to maintain a cybersecurity governance framework that facilitates informed decision-making and escalation to identify and manage cybersecurity risks. U.S. Bank agreed to pay $18 million to the court-appointed trustee for Peregrine Financial Group to resolve the enforcement proceeding against it brought by the Commodity Futures Trading Commission related to the bank's alleged role in the demise of Peregrine, a futures commission merchant, in 2012. The CFTC brought the legal action in June 2013, claiming that the bank facilitated at least some of the misappropriation of Peregrine's customer funds by Russell Wassendorf Sr., the firm's principal, that led to the firm's bankruptcy and loss of more than $215 million of customer funds. The CFTC claimed that U.S. Bank knowingly facilitated at least some of the principal's wrongdoing when it permitted Mr. Wassendorf to transfer funds out of a Peregrine customer account to pay for his private jet, restaurant, and divorce settlement, among other things, thereby treating the Peregrine customer account as a personal commercial checking account. In settling this matter, the CFTC acknowledged, quote, that U.S. Bank has already taken significant remedial action to strengthen the internal controls and policies, end of quote, regarding its handling of customer accounts for its future commission merchant clients. The European Securities and Markets Authority issued technical advice to the European Commission to make the market abuse regulation applicable to market participants and investors. The market abuse regulation, which became law in Europe in July 2014, articulates conduct that constitutes market abuse, including insider dealing and market manipulation. Among other things, the technical advice provides an extensive non-exhaustive list of indicators of manipulative conduct constituting the prohibited dissemination of false or misleading signals to the market and the use of so-called quote-unquote fictitious devices or other forms of quote-unquote deception or contrivance. The European Commission fined ICAP approximately $16.9 million for its alleged role in colluding with other brokers to manipulate the Japanese yen-denominated London interbank offered rate from 2007 through to 2010. Previously in 2013, 6 banks admitted their involvement in this collusion and agreed to pay fines in aggregate of almost $790 million US. ICAP was not one of the entities. In response, ICAP announced it will appeal the European Commission's decision in European courts, claiming that, quote, "This is a regulatory matter that already has been settled. It is not a competition issue, and the EC has presented no evidence that ICAP facilitated a competition law violation," end of quote. Previously, ICAP Europe settled charges with the UK Financial Conduct Authority and the US Commodity Futures Trading Commission related to actions of 3 of its non-US based employees to manipulate the Japanese yen LIBOR from at least October 2006 through January 2011. And finally, CME Group announced that it would close most of its open outcry futures trading facilities in Chicago and New York by July 2, 2015. Most option contracts that trade actively on both the floor and electronically, and the S&P 500 futures contract, will continue to be traded in open outcry markets. Separately, ICE Futures US delisted the cash-settled frozen concentrated orange juice futures contract as of February 6. Sadly, the relevance of trading places the 1983 classic comedy starring Dan Aykroyd and Eddie Murphy about the manipulation of the orange juice futures contract on a trading floor in the old World Trade Center will soon have little or no context after the closing of the New York trading rings and the delisting of the orange juice futures contract. Alas, memories. Well, that's it for this week's Bridging the Week. As always, there's more information in each article and many more articles on the article version of Bridging the Week on the website. Check it out. Until next week, this is Gary DeWaal. Have a great week, and ciao!